All right, what's up, everybody? So, we are gonna start taking a look at the upcoming week with the indexes first, and then we'll jump into a few of the big names that get traded a lot. So, let's start with SPY on SPY. We saw something interesting, really all month long. Where if we go back, let's backtrack to September 2nd. That was the first day of September. We actually had this pretty harsh gap down after the sell-off on the last day. That was a Friday, August 29th. So we gapped down pretty harshly. We wicked down all the way down here to 634.90. Did end up a green day, but it was definitely a bit of a scare tactic by the bears. After that day, you end up feeling kind of like the Bears are in control and the whole narrative of a weak September was going to play out. What was interesting to me is we saw a pretty hard gap up, and we then saw a subsequent gap up on Thursday, September 4th. And this gap up pushed incredibly hard up and over, essentially closing at all time highs. And once I saw that on Thursday, September 4th, I was pretty sure the bottom for September was in. Run a group chat with a few buddies of mine, and I let them know about that. I should throw up that screenshot here, but I let them know about that, and I decided to put in this purple line here for myself, just to kind of see if my read was right. And sure enough, we ended up, going on this pretty epic run in September. So the reason I bring that up is because on Wednesday of last week, we ended up getting follow on sell off from the prior day, and then on Thursday we gapped down and we started coming down pretty harshly. At that point, the feeling was, again, maybe this is where the bears are finally going to step in and pull the rug out from under us. What I found really interesting is you have this fair value gap that I was expecting to be closed, and we didn't see it visited on the 17th of September. I thought that might be the day, and we didn't see it visited on Thursday, on the 25th either. So that was a little bit of a surprise for me. It's a fair value gap, doesn't have to be closed. There's no rule that it has to be visited, but I thought we would. The fact that then on Friday we got this gap up and this pretty aggressive move topside was indicative to me that we got a lot of room to run here. It's not to say we can't get ourselves caught up in some sort of bull trap. You could potentially see something, where you come up and over, maybe you fail that, try again, fail that, and then the bears take us down. Do I think that ends up being the likely path? No. And the reason I don't is because, like I just said, when you have these really strong recovery moves up, this gap down becomes, number one, a failed bearish move. Number two, this invalidated the island top look. So if you notice, we basically had a little bit of, let's just use the common gap, a little bit of an air pocket here. And if this path would have continued, then that would have left essentially this entire area up here as an island top. So the fact that we're not seeing that happen to us is incredibly bullish. The upcoming week is going to be important for us because we do have some important economic news on Fridays, the bigger day of economic news. So private non-farm payrolls, unemployment rate. So we got quite a bit on the economic calendar on Friday. So what that makes me think is on SPY that we see some volatility come in on Friday. But there's nothing about this look that is bad. If you go over to the Qs give you in my opinion, even a little bit more of a clear look on the whole island top setup and the potential to have lost it, and how incredible is this hammer candle, this bullish hammer candle, to invalidate the downside move, right? Same thing, right? We didn't come down here and we weren't faced with this being an island top, which would be really nasty. So we're going into October. November, December's typically going to be a pretty bullish time period. I would expect some pretty bullish behavior coming up here. I think the first couple weeks of October a little iffy, just because do I expect us to go a little bit further up, maybe retest this, maybe come back up? Yeah, I probably do. But again, we've got the narrative of the rate cuts. It's been confirmed that we're essentially going into an easing cycle. Treasury secretaries already confirmed that and said that. If you look at what Powell has said, confirmed that, said that in the ways that he can and the ways that he chooses to use his words. So we know what's coming in terms of the rate cycle. What I wonder is, the economic data that pours in, how does that end up looking? Does stuff like the unemployment rate, does stuff like some of the other jobs numbers come in and rattle investors? It's pretty simple. Jumping over to Bitcoin real quick. I think we all had this eye on this inverted head and shoulders look, and initially, so this Thursday the 25th, this was a pretty harsh sell-off there to kind of freak people out. We initially had this look, and this look was set something like this, right? So Monday, Tuesday, Wednesday, it was looking pretty good. We had this green candle, and then it felt like, okay, this is getting a little bit scary. What I think is really incredible is it did still keep the look intact. It's a little wonky, but it's intact. Neckline's up here, right? What we've known for quite some time, if you kind of go back and zoom out, what we've known for quite some time is this 120 seems to me a super obvious level. We need to base this level, whether that's blowing through the level or whether that's basing the level like we tried to do up here, and instead of failing, retesting and confirming and then going, I think is what's most likely. And in my mind, if you don't capture 120, you're not really getting anywhere on Bitcoin. So it's interesting to me in that we got the Monday candle starting to form. So I'm filming this at 11:25 p.m. On Sunday night. So we got the Monday candle starting the first few hours, and slight selling, but at the end of the day, I expect this thing to go, particularly when the market opens on Monday morning. I expect this thing to potentially start making its way back up. If this confirms, and if we get to that 120 and we can confirm, then we're off to the races. Then things get pretty interesting for sure. With that said, I'll jump over to MSTR real quick. So on MSTR, we had a little bit of a lot of a breakdown, really. Obviously, the narrative with Saylor, the ATM. Look, it is what it is. At the end of the day, if Bitcoin doesn't run, if Bitcoin doesn't make its move, MSTR is not gonna make its move. In many ways, I consider it and Saylor himself has talked about this, consider it a leveraged Bitcoin product, right? A leveraged Bitcoin ETF, if you will. It's not an ETF, but it's essentially a product that's like that. And by Michael Saylor's own words, he's essentially telling you, if you want to add some spice on to your Bitcoin holdings, buy the common stock. all that to say that if Bitcoin moves, if Bitcoin gets to that 120 and then base is there, confirms and goes, I expect MSTR to go way higher. This is a really, really long consolidation look. After tariff mania in April, came back up, a little bit of a consolidation correction, bull trap if you want to call it that. This was, I think, the real section where you had, I think a lot of people were just incredibly long on this move up here, and these people just got wiped out. Bottom line, MSTR, if you aren't aware, is a stock that had a pretty incredible run. It's a couple times it's happened already, but this run, when you have something that goes and just absolutely moves parabolic like that, you get a lot of people obviously make a lot of profits. You get the profit taking candle, this candle right here. So you get that profit taking candle, and then just a lot of leverage gets wiped out, bottom line. So in my view, MSTR is just consolidating. It's been consolidating. There's no doubt about it. And what ends up happening is if Bitcoin does get that launch, then you're going to have another one of these absolutely parabolic runs. If that isn't the outcome, right? Meaning if Bitcoin doesn't get that, then this thing gets ugly. As far as the near term, as far as practical expectation or application of just whether you buy, hold, sell, look, none of this is financial advice, but at the end of the day, if you believe that Bitcoin's going to run and you trust that Saylor's going to do something incredible by building brand new credit markets built on the back of Bitcoin, and that there's value to that, then I think you should be in this stock because you're going to be a believer in the vision that he has. That's pretty much it. So that's kind of that on MSTR. Robinhood is incredibly interesting to me. Been holding for quite some time. Actually, going back to tariff mania, it's pretty incredible to me to think that we were down here at essentially $30 for Robinhood, and we're sitting at 120, so 121. So after the absolutely incredible run post tariff mania for Robinhood, we ended up in this consolidation phase. And then if you kind of notice, right, you end up kind of topping out here. You were in this range. So you're doing this dance for quite some time. And as is typical, if something's running hot, institutions are going to try to find their ways to load up. If they can't take the stock down, then at least it's got to go sideways, and they got to get their bags too. And then sure enough, what happens? You get the Friday close, Friday, September the 5th. You get this close. If you look at how harsh this wick is down here. So this is just, you gap up in the morning. Institutions took you, scared you to death, and it ended up being a red day. And what happens at that point? You're thinking, I'm going to sell my shares. I should sell my shares. And if you're not following the news and you're not aware of what's on tap, you're going to miss out on the fact that was the S&P committee announcing the reshuffling. And sure enough, Robinhood made it in. So with that news, then Monday morning you get the pop. They don't actually get added to the index until 2 weeks after the fact, but the news is out. So you end up, buying that news, essentially is what happens. So you gap up, gap gets protected. And with any gap up, as long as you can protect the gap, I mean, if it's a bull market, you got no qualms about it, right? You got no reason to worry about it. So at the end of the day, you protect the gap and you start pushing back up. These last couple of days, by the way, this large volume candle, if you notice, that's Friday, September 19th. So exactly 2 weeks after the announcement on the 5th. And so that was the actual date that it's added to the index, and mutual funds and all these other pension funds, all these other passive funds end up adding it to their books, and there you go. You get massive volume, you get a nice push up. What's interesting to me here is you had a bit of a candle out here, a little bit of indecision, obviously a little bit bearish, right? A little bit of a sell-off. The bulls opened up with a gap right up here, tried to push it up. That was immediately sold off, and the day ends up red. And then you have this gap down, and you end up same thing, kind of indecision. The next day, which was Friday, you have a little gap up, and you can't hold it. And so all that to say that the last 3 trading days for me feels like another one of these instances where you just wonder if there's not some sort of, maybe a bit of a retest here, whether it's right up in this area where you're seeing these 2 wicks, roughly 120, 120, 40, 120, 50, or if we revisit 118, 117, again, I don't think that there's a huge deal there. 116, there's just not a huge deal there. But with the products that Vlad, the CEO, is and his team, obviously, the products they're putting out, the pace at which they're putting out their products, banking's coming on pretty soon. They're just prediction markets, right? Football, college football, NFL. It's all lining up for them. The great wealth transfer narrative, right? The youth that's actually taking control of their finances and investing. It's all lining up for Robinhood. So this is incredibly bullish. If at the end of the day, similar thing. So, like I said, even if you come down here, it just doesn't even matter. Like I think this, I definitely don't think it would even take this long. And I don't think any sort of wonky pattern like that's going to play out. I would guess that we get a little bit of a gap up, and then at some point here, it's gonna be off to the races. So Robinhood, I think's got a lot going for it. In particular with Robinhood, I know one of my positions is using a percentage or a certain amount of my shares and just religiously selling covered calls for income production. And so I've been doing that consistently for several months at this point. And that's what I'm looking for. So hopefully Monday, maybe Tuesday, if we can get a pop-up, a gap up, and we can get a little bit of a harsh run up, then I'll look to sell covered calls into that. 130 I think could be sticky. Obviously, we ran up to it here on Wednesday, and so those round numbers are just, they're psychological barriers for us. There's nothing special about 130, but at the end of the day, we revisited it once. It's kind of like a ceiling. You end up tapping it a couple more times and we'll get through it. Maybe we tap it just one more time and we run right through it. So wouldn't be surprised if we're there maybe Monday or Tuesday if the indexes are green and everything's looking good. If we get a bit of a sell-off, then I think, like I said, revisiting this 120 down to like 118, 117, I think could be in the cards. As you go back, so you tapped it a few times here, and we finally broke through, retested it, failed it, recaptured it, tried to push up to 130. So a little bit of indecision, right? A little bit of like what's coming next, whether you end up doing one of these deals, who knows. But I could see that. That makes a lot of sense to me. That's pretty much it on Hood. Another interesting one to me is that doesn't actually get talked about that much, but has a decent amount of trade volume on it. And obviously it was an IPO, very recent IPO. Had put a little context to this, take all these levels off. IPO, like so many IPOs do, speculative kind of IPO, boom bust. So I mean, this thing pushed up to 300, right? That's incredible. So I built up a position over several weeks out in these areas. 130, 140, 150, even up here. I had started, and then as we were selling off, I added and added and added. And the reason I did it is twofold. Number one, the premiums are pretty good, pretty nice for wheeling, for selling puts, selling calls. The other thing is just the narrative behind the stablecoin, regulatory clarity, adoption, kind of mainstream understanding and education, and the fact that at the end of the day, these stablecoin issuers are going to have to be the buyer of last resort for the U.S. Treasuries. And so when you know that the U.S. government is going to essentially need these stablecoin issuers to step up for these the 10-year, the 30-year, it's just how they're going to be able to, part of how they're going to be able to control the yield curve. So with that knowledge, it's pretty much a question of where was the bottom. So we found the bottom. At the end of the day, we kissed 108.02. So it's basically 108 on the dot, and we found this bottom. Once we do that, I was selling covered calls. I've been selling covered calls all the way up, all the way down. It's a no-brainer with the premiums, and most of these moves were pretty easy to understand. This was a really incredible covered call opportunity here because you had this massive gap up after earnings, and it was pretty clear that it wasn't going to hold. And you had plenty of time as it was coming down. You had plenty of time to sell some really juicy covered calls. So that was a good one. But all along the way, all through these ranges, I've been selling covered calls. So this day right here, when we get to this day, that was an interesting one. So I had covered calls, and that was it was probably set at like my strike was probably like 125 or something like that. And this candle comes in on a Thursday, and I see that happen, and I say, okay, well, let's see how this plays out. I'll make my decision. I start kind of checking what my options would be for, no pun intended, what my options would be for rolling up and out on Thursday, but I don't make a decision until Friday. Friday is the day that my contract expiry was for, and so that day we had a sell-off, right? I expected roughly a retracement, maybe to about 50% of this candle. So my strike was 125, and I thought, we're probably going to get down to about 124, but I don't know where we're going to close. I don't know if we close at 124. I don't know if we visit 124 and then bounce back up. And sure enough, this wicked down. The low of the day was 124.50, and we closed at 125.32. So what I did was, it was probably about 20 minutes left in the trading day, and I was just like, it's just going to be too close. I might lose the shares. I don't want to lose the shares. So I rolled up and out, and rolled up and out to, I think, about 133 for a week later. And then obviously you see what happens, right? We get a pop up, so gaps up. We end up getting another gap up, and then it sells off, comes back. And so by Wednesday of that following week, I closed out my 133s. Once we were somewhere down here in like 129 area, and was able to realize, most of that premium, probably about like 90% of that premium, with a couple of days to go. The beautiful thing about that was then on Friday, we gapped up and we pushed up. And once we were up here in this kind of zone nearing this resistance line that I have at 150, was pretty sure, we were up here like 146, 147, I think. And so once I started seeing it come back down, I wrote some covered calls. Wasn't anything that, because obviously I was writing it down. And so as that's coming down, your premium is decreasing if you're a little bit further out of the money, or in the money. And so I wrote some covered calls there, but sure enough, just the sell off continues. Was able to take profits on that. Probably I think on like Tuesday. I think I held it on Monday, and then on Tuesday, I was able to take probably like 95% of those premiums, and then I kind of just have been staying pat. So to get to the point of practical application for this coming week, we basically got down to, what do you know, this level, this kind of midpoint of this candle again, right? So we tapped at the low that wick went down to 122.83, and then we finished closing the day on a green candle, 126.99, so 127. So that's that. After this sell off, we ride this down for what's that, about 5 days. We end up with a nice inside candle, and so I suspect that we'll start seeing this move back up, whether or not we end up getting caught up a little bit at this 133. As you can tell, it's been a little sticky. Various points along this way, it's been a little bit sticky. So look out for that. We might run into a little bit of a roadblock there. If not, 140 for me just obviously continues to be a point of contention. And so at that point you say, okay, I'm going to write some calls, so some covered calls. So I'll be looking to do that probably Monday or Tuesday if we do get the follow through that I mentioned that we might get with whether the indexes, hood, a lot of these names I think are looking good for some upside moves. I'm hoping that there's an opportunity there. If you are looking to write covered calls, maybe that's something you look at as well. But that's something, again, not financial advice, but that's something I'm looking at doing. Unity is another really interesting name to me. So Unity had a great day on Friday, and it doesn't the chart doesn't necessarily look like it, but if you notice, so I put this purple line in. And I had this line drawn basically the day that this gap up happened, and I saw this wick down, and I figured, at some point we're in the fairly near future here, probably going to revisit this thing, because again, very similar to what I was talking earlier on the indexes. And when you see these looks up here where you can go, this could easily be an island top. So particularly when you get this candle right here on Thursday, that was a little bit of a rough candle. When I saw that on Thursday, wasn't loving that, because if you lose this 40, call it 42, I have it at 42.50, call it 42 is fine, and then you lose 41, you're probably going to revisit 40, and at that point, you got to hope that this support actually holds. But the bottom line is, at that point you had gapped down already, and so that would have confirmed the island top look was the point I'm making. So the fact that on Friday we got back up by, what do you notice? Again, 50% of that candle body recovered, and another thing that you notice is we tapped exactly at the level that this wick had gone down to. So it's not by chance. There's no doubt about it. This is definitely really, really incredible behavior. Market makers, institutions, retail, just all of us combined. Really incredible how we can kind of confirm what the moves are just by critically thinking through this stuff. So this looks great, right? Recaptures this support, or this key level of mine. Doesn't have to be the exact level. It's 42.49 on my chart. If it's 42 on yours, the idea is somewhere around this gap up, you got some sort of key level is the point. A few pennies here or there it's just more of a range. So the point is, we recovered the level. We recovered about 50% of the candle body move. So this to me looks like it's primed for upside. What I'd wonder on this one is just how aggressively, how soon, how quickly can we get up and start challenging these wicks up here in this $46, $47 range. And I think Unity's looking fantastic. I think if you look at, even if you go on a weekly, and you just think about what makes for bullish structure after what was quite a bit of consolidation here, right? Like we're talking basically from, and it goes even further back really, but from September, October, November of 24, all the way until we finally were able to break this. We had tapped on it a couple times. We break this 30 level, and then we just July, we just start ripping up, and we started tapping, getting close to tapping on that 40 level. So once you saw that break, you're just in the mindset of, do I have bullish market structure? And bullish market structure is essentially, are we setting higher highs? Are we setting higher lows? Higher highs, higher lows. So let's see how this plays out. Even if it were to come down in here, you still have that bullish market structure, essentially that trend up. And so, yeah, this looks fantastic. And yeah, I mean, on the weekly, it looks really good. If you notice, these types of retests on these really strong pushes are totally normal. It's incredibly repetitive in nature in terms of how the market will trade stuff like this. And then you'll see these really strong follow-ups. And what do you know? We're coming right back down, testing roughly 50% of that candle body, as you see on this wick. Again, this is a weekly chart. But if this weekly chart was an hourly chart, I don't think there's anything in this chart that you'd look at and think that there's weakness in the trend. And when you know that the indexes are looking strong, and when you know that the market structure for this name is looking strong, can't be anything but bullish for something like this. So setup looks great. I like it. I'm in it. I'm in shares. I'm in some long calls. So yeah, I love that. Absolutely love that. Let's see. A lot of people talking about Amazon, so we can look at that real quick. Amazon is interesting to me. So Amazon had this setup. Could even go weekly on it too. So Amazon had this setup, and the setup looked amazing. And the setup fell out of this ascending triangle, which I didn't expect, but at the end of the day, you had the 1 week in September here that was a little bit, I guess, bearish for some names, right? A little bit of a pullback for some names, I guess I should say. So super interesting in that it comes out of that wedge. Doesn't mean that the bullish move for Amazon's over, or that this thing's going back down lower. It doesn't mean that at all. What I would say is you're in a little bit more of an extended consolidation than you maybe had hoped for. But other than that, I mean, you're starting to see a little bit more volume come in on the name. And at the end of the day, when you've got the narrative with the cloud needs, obviously their retail business continues to be strong, but the cloud needs for these AI companies, that's none of that narrative's going away. I know that at the end of the day, you've got massive amounts of institutional holdings in this. So to me, you know, if you come back down, just even on the daily, you see Amazon putting up a fight here around 220, and it tried to freak people out, right? The bears tried to kind of get you a little bit scared. Essentially, gets bought up slightly. You see the wick down, gets bought up slightly, and then finally on Friday you put in an inside candle, but it's a bullish candle. It's not as bullish as you'd hoped, and just in that it didn't retake and actually reclaim the 220 level, but it closed at 219.78 by all intents and purposes. That's, we'll call it 220. So I think what's more important is what does it do in these first few weeks of October. I think if you look at this as a consolidation move, there's just nothing scary about it, right? It's the slow rise up. Obviously, was coming from tariff mania back here, but you see kind of slow rise up, earnings dump, slow rise up, a little bit of regression, a little bit of retracement. Find support here at 220. Figure out, what this looks like, and at what point are you busting through and going up. Does it take you this long to where you're in December? I don't know that. Nobody knows that. Nobody knows the future. Do I think so personally? No. I mean, we know how all these names are. A bit of news drops and this thing can have a big day. So I'm in shares, like so many others are, and some longer dated calls. So Amazon ain't going anywhere, right? Tesla, obviously everybody knows the move it had. I think the interesting thing about Tesla right now is look at all this activity at 420, like meme number 420. It's gonna check and bounce off of that, and then at the end of the day, Tesla's going to make a massive move, and everybody knows it. And whether it's off the back of Elon getting out of politics, whether it's off the back of the intensifying race for robotics and kind of more real world AI applications with robotaxi, they're not stopping. The tech's not stopping. And when you've gone through this much consolidation, it's Tesla. We've been here before, right? Like everybody knows this story, right? These parabolic moves, and then you get into these long consolidations. And I think the incredible thing about Tesla is, if you think about going back here to the end of 2021, and essentially being at 420, kissing 420, obviously moving well beyond that for a little bit there, and around November, December. And then now we're here again. So again, it's like a bit of a ceiling. You tap it once, it didn't break. You come back up, you tap it, you thought you broke through it. You fell back down, you come back up, you fall back down. That glass ain't gonna hold you back very much longer. So I wouldn't be surprised if we get just some absolutely incredible price action on Tesla. We'll see how that goes. But there's absolutely nothing bearish about this setup, right? You go from consolidation to these key breakouts. Again, you have this is on a weekly time frame, but you get these gap ups, and if you can protect these gap ups, then you look for bullish structure. And if you're going to get bullish structure, the sky's the limit, right? So once you break through this 360 that was so sticky for quite some time, you get this gap up. And yeah, like I said, if you protect this, there's no doubt in my mind, whether it takes a month, 2 months, 3 months, 4 months, who knows? Nobody knows, but there's no doubt in my mind, you protect this area. I'd say 420, but yeah, 410. And essentially the majority of this candle here, coming all the way down to the 360. You don't want to spend much time in here. You don't want to close this off. You just want to run away. If you're a bull. So yeah, that's Tesla. There's not much more to say. It's an animal, and I expect it to keep on ripping. NVDA, we'll look at that real quick, and then we'll call it a night. So NVDA, yeah, inverse head and shoulders look we had here. Played out in that, it made the pop up. It just got stuck again. Another one of these same looks. And this one, look how many times we're tapping the ceiling. So if we're correct that the indexes look pretty strong, if we're correct that a lot of these individual names look pretty strong, the bid is there, The seasonality is there. At the end of the day, NVIDIA is going to break through this glass ceiling, because you don't tap it this many times and actually follow through with bullish price action, even after a bit of a sell-off here. Follow through with some bullish price action. Damn nearly got 50% of that candle. Kind of an indecision candle here. So this week could tell us a lot. Next couple weeks I would say would tell us a lot, whether we're just going to kind of consolidate in this zone for a while. I don't think that NVIDIA is going to be seeing. I don't think you're going to be seeing much downside on NVIDIA. I don't think you're getting too many more opportunities under this certainly this like 166 that I've got marked off. I wouldn't expect it. If it happens, sell whatever you can and buy some NVIDIA. But the AI story is not stopping. The competition's out there, but there's just nothing like what NVIDIA's putting out there. So, yeah, I would expect topside move, and then I'd look for bullish market structure. It's a huge name, so obviously it takes a lot to move it. But yeah, nothing bad about, nothing looks bearish about that. So I think we'll wrap it up there. I think that's a good look at everything. But yeah, let's see how the market does open up. I think I'm incredibly interested in the indexes and just following what's the follow through. And so, like I said, if we can see some follow through on Q's breakthrough 600, I'd love to see that. On SPY, if we can reclaim this 665, let's call it, get above this mid kind of belt line on this sell-off candle, I'd be really happy. And if that happens, then yeah, I'm looking for topside on some really impulsive moves on individual names. I'll be looking to do some covered calls as usual. On some other names, I'll be selling puts, just doing wheel strategy work, raising income. And then obviously on certain names, I just hold shares and wait, like any good investor should. So that's a wrap for this one, but I'll see you guys in the next one.